The price of Bitcoin is officially broken below the bear flag and confirmed its validity. I am in a short position. Well, I'm in a short hedge position for my longs that are 2x leverage that I'm keeping for the next bull market, but I'm also in additional short positions to just time the move that I believe is going to happen next, which is what I'm going to talk to you about in the first segment of today's video. We'll focus on the bear flag for 2-3 minutes. We'll go through other indicators on why I think Bitcoin is going to drop in the short term. And then we will go into some very good news for Bitcoin's macro future with Morgan Stanley. Eric Balcuna says that it's semi-shocking. I think it's very, very shocking. After we're done with Bitcoin, we'll cover the S&P 500. We'll see what's happening latest in geopolitical tensions and how that will impact markets. Friday night, President Trump decided to commentate on Bitcoin. We'll take a look at those too. If that sounds interesting, do me a favor and destroy the like button on today's video. That would be very, very much appreciated. It will help push this content to a brand new audience so that more and more people can watch these videos. If you're not subscribed, do subscribe for daily content. And if you're looking for a place to be going short or long on Bitcoin, check out the links in the description to LoveX, where you can trade Bitcoin and other cryptocurrencies. You'll get exclusive CryptoKid member updates. And BTCC allows you to trade things like WTI. It allows you to trade things like gold and silver as a crypto person. Bitcoin. Why is Bitcoin looking bad in the short term? Well, the daily bear flag is broken down. Remember what took place on the bear flag between November to January of 2026? You broke below, people denied the existence of it, people were still calling for Bitcoin to move to new all-time highs, and now this was it. This was the end of the Bitcoin crash. You confirmed the validity, you got the retest, and boom. Bitcoin fell from $88,000 to $60,000 in a blink of an eye. We're looking at a textbook perfect bear flag once more that broke down on the daily, confirmed the breakdown, and we're trading around it, waiting to go into the next week where there's more liquidity that comes into the picture. So for me, I see this as more bearish than it is bullish, and I have my factors to back it up. Trading is a game of probability, and in this game of probability, I prefer to be short. So I opened a short position market at basically where the price is currently last week on the Moon Show, or during the weekdays on the Moon Show, and I have another limit order to increase my short positionings at $67,900, just in case Bitcoin wants to get a retest like it did in January before seeing the ultimate capitulation. So 67.9 is a limit order that I have to add to my short position, away from my short hedge position, which is for my longs. That's a different story. But for these ones in particular, I want to add at 67.9. I'm already in a short, and my take profit is not placed at $39,000, $38,000. A lot of people are measuring the target of this bear flag like the pole. I mean, they take the pole, they put it to the breakdown zone, they hit the resistance or the support line. There's two ways you can do it. I think the taking it from the upper resistance is a bit more conservative. They take the pole and the target is 40K, 39K. Now, technically you can do that, and technically that's how you're supposed to do it. But for me, I never like to trade patterns with the height of the poles. It's just not what I do. I prefer looking at support lines that we have in the way that would make sense for us to reach. And those support lines to me are 55, $57,000, and 49K. So I have three take profits for that short, which is, I'll repeat, 57, 55, and 49K. Where is the bottom of the bear market going to be? It's very tough to tell. Very tough to tell. I would hope that it's one of those three lines and we don't fall further. But even though if we do fall to 39 or 38, not saying it's going to happen, then technically the 4-year cycles would still be plausible, because in terms of percentage drawdown, it still makes sense with what we've seen in prior history. I just want to summarize it and say I think the long term is very bullish, which is what we'll get into right now. But the short term, there isn't much accumulation. There's more selling activity from whales than there is buying activity. Bhutan is selling Mara, previously the second largest Bitcoin miner in the world, sold a bunch of Bitcoin, like 1 billion in Bitcoin, and they've now taken their place as third largest Bitcoin holder in the world. The midterm years historically are very bearish. The low should be identified in September, October. And until then, I'm just accumulating Bitcoin. I think the realized price is going to be hit. The realized price has been the level which in every single cycle Bitcoin came down to. It turned Bitcoin holders from profitable to unprofitable, got rid of the weak hands, and boom, up went the price of Bitcoin. I know we're in extreme fear, but in bear markets, you're often in extreme fear. And I just think for the long term, it's a good buying opportunity. But in the short term, I think it's a good shorting opportunity. Speaking of that, long term, Morgan Stanley is the first ever bank to offer Bitcoin ETFs. It's coming up soon. They filed their S1 for their Bitcoin ETF. Being in the S1 and being Morgan Stanley, I think there's a 99% chance that their Bitcoin ETF is going to be approved. See, they manage roughly about $6 trillion worth in assets. And their product is going to have a 14 basis point reduction of cost than the most popular Bitcoin ETF, which is IBIT. It will be the cheapest available Bitcoin ETF on the market, meaning when this Morgan Stanley ETF is launched, their clients will not hesitate to say, should we put it in IBIT? Should we put it on Morgan Stanley? Should we put it in Fidelity? No, they'll go with Morgan Stanley because it is the cheapest option available. The estimated allocation percentage of Morgan Stanley client assets for this particular ETF, I would say realistically is between 1 to very optimistically 5% in the long run. That translates to, in the most bullish case, $300 billion. The Bitcoin market cap currently sits at 1.3 trillion. So that's 20% of the Bitcoin market cap potentially funneling in from these Morgan Stanley clients over the long term to hold, not to sell, to mostly hold. You guys know the ETF buying and selling activity. When Bitcoin goes up, they accumulate a bunch. But when Bitcoin goes down, they don't really sell. We want these ETF guys because they're not like Gen Z, they're not like millennials, they're Gen Xers, baby boomers even. They know how to hodl. They know how to hodl, they don't sell. So this is great news. I think it's amazing. And finally, SEC Chair Paul Atkins mentioned that it's time to unlock the $12.5 trillion stuck up in 401k retirement to be put into Bitcoin, to be put into crypto. President Trump in 2025 signed an executive order where $12.5 trillion of 401k retirement funds should be going into alternative assets. That's still not taken place. If 2% were to go into Bitcoin from this 12.5 trillion, I need to do quick math in my head, 10% is going to be 1.25 trillion, 1% is going to be 125 billion. So you're really looking at $250 billion, roughly 20% of Bitcoin's market cap once more. So ridiculous amounts of buying pressure are going to hit the markets for Bitcoin. If geopolitical tensions get worse, which I'm praying to God that it doesn't, praying to God that it's solved as soon as possible, but in a hypothetical realm, where if geopolitical tensions got worse, and you saw countries that are affected, their power goes out, electricity goes out, God forbid, hopefully nothing like that happens. But theoretically, in that world, you would see the banking infrastructure get completely shut down. If there's no electricity, there's no banking infrastructure. People need to protect themselves, they need to protect their family, they need to protect their capital. How do you protect your capital when there's no electricity and you can't withdraw from a bank account? You can't. You can only do it with Bitcoin and crypto. So I think in a world of anti-institution, anti-elite, geopolitical tensions, Bitcoin should be going to the upside massively, but it's not because people don't see what we see, which means there's an opportunity, which is why I may be shorting the short term, but I'm buying as much as I can because I see where Bitcoin is going to go in the long term. The S&P, we called the drop. We were saying that Bitcoin has dropped initially and that the S&P will follow after. People laughed at our faces, but that's okay. I'm here to give you the transparent TA, the transparent news. The S&P is dropping. Like we predicted, Citi is reducing exposure to American equities due to the Iranian war. I think if the war is finished, then we could see one more rally, but that's not the base case that I'm heading with. I think the base case for the S&P is that we drop more, which would result in Bitcoin going into the mid-50 ranges. It makes sense. The American economy is doing terrible. $39 trillion in national debts. 14 trillion of it is an interest payment on that debt. And then 10 trillion was from wars in Iraq and Afghanistan. Being in wars is the single biggest addition to national debt that you can do as an administration, which is, ironic from my view. It's quite upsetting. As debt increases, the financial system goes further into the brink of collapse, which again translates to higher Bitcoin prices in the long term because people will have to funnel their money into Bitcoin, not because they want to see an upside on their investment. No, just for their money to work, they need to go into Bitcoin. And the national debt is continuously increasing. When you go into war, when you need to refinance $9.5 trillion of debts, When you look at the 2-year bond, then that's signaling 25 basis point increase. It all translates to more and more interest rate payments, which translates to more and more national debt, which translates to more money printing. Like, it's a mess. It's really a mess. And in this mess, the gateway or the escape is Bitcoin. People haven't understood it. That's why we have asymmetric information, which provides us opportunity for this relevant scenario. Speaking of the 2-year interest rates, I mean, it looks like we're gonna get a 25 basis point hike. WTI is still at $100 per barrel. It's been a month since we've been at $100. This will result in about 3.5% inflation in the next reading. When we get the next FOMC, I think they will either hike rates or keep them steady, with risks to inflation that's going to be stated as pretty high. I don't like what I'm seeing from a monetary policy point of view. It doesn't make sense for the Fed to cut rates. I mean, you're seeing the US bring in 3,500 troops into the Middle East just yesterday. We don't know what they're going to do with them, if there's going to be a ground invasion or not. Let's hope not, for the sake of everyone. But if there is, then that's very concerning. The Houthis are currently looking into doing something with the Bab el Mandab Straits. Hopefully they don't close it. Hopefully there is no disruptions in that strait, because that would reduce oil trades even further, which would cause oil prices to go higher, which would result in higher inflation, which would potentially result in higher interest rates, and just total catastrophe in the short term. So yeah, I can't make a prediction on what will happen. I just know that even though President Trump is stating in his most recent important True Social post that there's ongoing negotiations and they're going well, when we look into the fields, that's not the picture. And these are critical pieces of information that I'm just going to keep on the screen. And I don't want to commentate too much, but you know, Cuba, then targets are being hit, which could cause severe retaliation. So let's please be careful. Let's please be cautious from the equity side, risk on side for the short term, and let's try and stay as safe as we can. Those are the important points. Finally, to end off, President Trump made some comments about Bitcoin. He said that people want to pay in crypto, in Bitcoin. We have to be on top of it. Yes, we can't fight Bitcoin anymore. They tried fighting against Bitcoin, and they understood that they cannot. So Morgan Stanley, a bank, is offering Bitcoin ETFs to their clients and potentially getting clients to become Bitcoiners. Like, it's just something that they cannot stop anymore. So they're embracing it. That's what President Trump is doing. Bitcoin is being acknowledged as something that the US cannot afford to ignore anymore. Bitcoin is very powerful, says President Trump. President Trump says that the US will be the undisputed Bitcoin and crypto superpower of the world. And you're seeing Eric Trump, the Trump family, launch more and more crypto businesses. This is all done on purpose because they see where the world is going to. The Trump sons know that they've been debanked for righteous, non-righteous reasons. I don't want to comment on that, but assuming it's non-righteous reasons, Bitcoin offers you to have the freedom of finance. You can use finance regardless if somebody's blaming you for something you didn't do. You can still access the financial system, and that's the power of Bitcoin. But it's very important that you're a righteous person and you're being blamed in a way that you shouldn't be. Anyways, controversial topic, won't get into it. So that concludes off today's video, guys and girls. I think we just need to huddle. We need to be patient. Yes, tough times potentially ahead of us, but all we can do is just stay calm, stay chill, and try to go through it. So thank you for watching. Tonight will be a video on tokenization. I'll see you all there. Bye-bye.